India's real estate sector is once again at the center of the country's growth story. From rising home ownership aspirations and infrastructure-led urban expansion to premiumization and institutional capital flows, the industry is entering a new phase of scale, sophistication, and consolidation. In this changing landscape, developers are no longer just building projects, they are shaping urban ecosystems, influencing the way cities grow as well. Hello and welcome to this special conversation on what's driving the next phase of India's property cycle, how consumer expectations are evolving across segments, and what it takes to build one of the country's most trusted and future-ready real estate platforms. This conversation forward, joining us today is Mr. Aditya Virwani. He's the Managing Director of the Embassy Group and Embassy Developments and member of the board at Embassy Office Parks REIT as well. Under him, Embassy Developments is seeing massive growth. Of course, we'll discuss that in the conversation, building onto the legacy that they've seen in commercial real estate as well, building onto it in ways that they're expanding across markets like Delhi, NCR, Mumbai, already a big presence in Bengaluru. Aditya, such a pleasure to have you with us on the show today. And you know, when we talk about real estate, the big talking point has been that big surge that we saw. Maybe we're coming off the peak, but you do have a big legacy in commercial real estate. Embassy is known for commercial. How do you plan to build onto that when it comes to residential? You have done incredibly well in the year gone by.
So you're right. We spent the better half of the last few decades building out institutional muscle, governance, design standards, delivery rigor, and a lot of value creation in the commercial space. Value creation for us, for our partners, and now for our unit holders at Embassy REIT. We now want to take this into Embassy Residential. And we have been doing Embassy Residential for a long period of time. In fact, this company started off in the residential space. This project here is a beautiful project we did back in 2014. But we now see a multi-decade residential boom panning out. And what happened the last few years in this country was very interesting. We saw what ticked off the last cycle, right? We saw household incomes growing. We saw savings. We saw the equity markets growing up, a lot of wealth creation. We saw rates coming down. And I think quite fundamentally, the relationship people had with their houses changed. People realized how important a house is, how much value it creates for the family, how it improves your life. And that makes us think that, look, there will be smaller cycles. We're kind of off the top right now. But from a 50-year period, from a long-term period, this country is in a multi-decade boom. And it is incredible because you can say that not just for real estate, but many consumer products. But we feel housing is one of those that's going to get the least disrupted as we go forward.
Okay, so housing will be least disrupted, especially at a time when we are talking about some of the crisis impacting sectors across. But we've not seen it in numbers for you, for your peers, but especially talking about Embassy. Tell us more about the demand in the sectors or the segments that you cater to. What about the end consumer pricing mechanism? Do you think consumers at this point in time are able to take the pricing that or there's room for more? Is that happening as well?
So look, I'll be honest, and I did say we are off the top of the euphoric period, right? We had 3-4 years of really robust sales, but also crazy appreciation. You know, we saw housing price going up double digits. But if you looked from a 10-year period, it would still be, I would argue, probably in line with inflation. And I think that is quite interesting because that's how these cycles play out. Now, if you still look at coming off the top, there's going to be even more consolidation. The last few years, you've seen the big developers eat up more market share. Some of the guys have 4-5% of the market right now. And I think that trend continues, is that the top developers stay on top of that funnel. If you keep building great product, building on time, good quality, treat your customers right, understand what they want, you know, do everything holistically, that last little finesse of the brand is then what keeps you on top. Because we only build 4 to 5 lakh homes every year. And that is not enough for the amount of people that live in this country. We think there's going to be a massive shortage. So even as the cycle tapers down, the developers who can be disciplined about appreciation not going too high and still make it affordable, I think we'll just keep selling, and that's where we want to play.
Mumbai is a market where we are seeing a lot of entrants coming by. Embassy has been very interested. You have announced big capex there. There are few buildings we can actually see on a daily basis. You know, the rapid construction that's happening. How big do you think that is an opportunity for you? What kind of capex are you planning to put in there?
So look, our whole thesis about the acquisition of Indiabulls Real Estate was to get a foothold into Mumbai. It is not easy to acquire land there.
Yeah.
So if a business wants to grow to 20, 30,000 crores, I do feel you have to be in the state that caters to 1/3 of the entire market. So it's a very important strategic move for us. And we do have some exciting projects there. We have something in Worli, we have something in Juhu coming up, we have something small in Alibag, but then we also have the suburbs. We've been playing this Panvel game, Savroli. We have few more launches there. So in Mumbai, we want to actually play across segments. We don't want to just stay in the redevelopment, desperate to get a flag in South Bombay. We want to focus on business principles. It would probably represent 30% of the business today. I see that 30% growing to 50% over the next few years. But today, in the short term, I think Bangalore will continue to be the main focus of the business. And we'll keep executing and showcase what we've done in Bangalore, in Mumbai. That's going to take some time. We know it. We're a little bit honest about it. And we just have to put our heads down and execute.
I think honesty really works with consumers, especially in a sector like real estate where trust is very, very important. Let's talk about your 6,000 crore guidance that you have for FY27. You've already done around 4,000 crore rupees in FY26. That was a massive improvement that we saw this time. What are going to be the triggers for that? Will it be the Mumbai market? Will it be that 70% Bengaluru market? What are your plans with Delhi NCR?
Okay, so we should be doing a lot more. Okay, this brand is capable of doing 20,000 crores plus, but we are coming back. We are refocusing on residential in a big way, and the journey has to start somewhere. So very pleased with 4,600. We have a 30% increase on our guidance this year, plus another 2,000 crores in our DM project. So it's actually 8,000 crores of guidance that we are giving out. Very excited and confident that we can achieve that. Mumbai will be that 30%. We're going to now pilot a small project in NCR. We think that's the most obvious next market to go deep into. And with Bangalore, Mumbai, NCR, that's like close to 60% of the market. That's why we want to play, put blinkers on and just focus there. So yes, we're very excited.
So how do you choose a market? Of course, Mumbai, you said it's 1/3 of the real estate market in India. Any other markets, say the likes of Chennai, Hyderabad, down south? Because Bangalore, you're already the king. Do you want to see other places as well?
No, we still need to do better in Bangalore too, get deeper market share here. But I would say Pune, Hyderabad seem like the most obvious next step. And I think, and we have something small in Chennai. If you look at then these 6, 7 cities, that's it. You know, we don't really see the tier 2 story playing out like it did in China. I think infrastructure is a challenge. Land price is still high. Margins are not that great, and volume is not that good. So we want to just be focused. But we also have to be honest that going deep into Mumbai itself is going to take a couple of years. NCR is another beast, and you were saying every single geography has a different customer and a different need. Bangalore is very end user. We feel very easy to deal with because it's the end customer. We've always been focused on the product. You know, even this project that we designed in 2014, this 2014 vintage, I'm so excited to showcase what we're designing now, because the new era of Embassy Residential is going to be completely special and unbelievable. And I just think that the customers will take some time to see that. But when we deliver this, then the next phase of growth is really where we can really make our margin.
I need to look at this beautiful project in Bengaluru. So let's go ahead and show me around. Yeah.
Let's do it.
We saw the Bengaluru property. We are talking about NCR market, Mumbai market. So that means expansion across geographies. How do you ensure employment or teams across different micro markets by ensuring that the vision remains the same? Have you already started deploying a team?
So I think that is actually the trickiest thing, okay, is now when you scale geography, how do you take that same culture that you have in your HQ to now new employees, new geographies, new people coming from different cultures? That has been kind of a challenge, but slow and steady, top down. We built out the geographical heads. We have a west head, we now have a north head. We're actually building it out very strategically. I'm personally interviewing everyone, and I think recruitment is such an important thing. I've really learned that over the last year. So it's going to take some time, but that leading by example, just that rub-off effect on culture, I feel is the only way where you can get that spread across different geographies. But I have to say the people that we've hired are exceptional people. As Embassy, I think we're really improving talent. We have an amazing set of people who built this company till here, but now we've brought on even better people who can now take it forward. So that combination of legacy people, great loyalty, talent, now coupled with a lot of knowledge, I think that's going to be quite amazing for us.
It's important, people, basically the foundation of any business, especially real estate, because it does involve a lot of conversations, understanding markets, and a lot more. As I said earlier at the start as well, commercial is a legacy for Embassy. We know it for years, and now you're making these changes in the residential business as well. How different are these businesses? You've been in both, you're building the other one. What is something that you want to take from the commercial business that will carry forward as a legacy, and what do you not want to take? Because again, these are different businesses.
Sure. So they are different businesses, but very similar in many ways. And I would say, just having operated a publicly listed REIT, having disclosure standards, governance, capital allocation, independent oversight, I think these are things that most residential developers neglect. So those best practices, taking it here, I think is just going to pay off. On the other side, I think that the approval process, the licensing team is the most important team in a development arm. And we have had that engine running and the execution engine. We've built large scale, 100-acre plus type of developments on the commercial side. Very intricate, a lot of encumbrances, a lot of different authorities to deal with, but we know that art. And just taking that and copy pasting it into residential is not that different. Now, what is different is when you deal with an MNC, you deal with kind of one face, right? You're dealing with more or less one person or committee. When you're building a residential, you're dealing with 400 different unit holders. And that can be the main challenge, right? Is you're now dealing with families, they have different needs. But like you said, understanding those needs is going to be the most important thing going forward, because those needs keep changing as well. So that closest touch you have to your customer, knowing what to design, not just designing something that you like, but designing something that, the masses will appreciate. The amenities you put in, I think that really is the difference. And I think we've done it. I think even with this project, it's not easy. This is 470 units plus, it's a large project. It wasn't a cakewalk handing it over, but each time we've done a handover, we've learned so much, and just taking that learning onto the next and the next. That's what differentiates a developer who has 3 decades of experience over someone who's just entering.
So in that case, which is your favorite project so far, or which is the projects you're looking forward to the most?
So I can't say one because I'm really excited about so many different projects, but I'll just name 4 random ones. Embassy Eden is a luxury villa project. We sold 1,000 crores of inventory. We've not even launched it properly. Our marketing office is still yet to be built. And someone was just showing me a figure that Bangalore did 2,000 crores in the above 10 crore category. And we catered to 1,300 crores. 75% of that came from Embassy between Eden and Embassy Lake Terraces. So it's really remarkable. Eden's going to be a special project. It's a really curated community that we're going for. Embassy Eden, our Juhu project, which we're launching, is just something incredible. It is so special. We put our heart and soul into the design. It's a low rise, so we can finish it quicker. It's going to be something different to what Juhu has seen. We're very excited to showcase it in Mumbai. And I would say Citadel is just special. It's 1 million square foot, but we've gone all out with amenities. as a lakh square foot. You know, Worli, Naka, the location is amazing. It's also kind of a value proposition in Worli. You know, most people have gone with very large flats. We've intentionally gone a little bit smaller. And I do feel we're at a major discount to the top developers. But that's okay. We want people to make money. We'll end up making money too. And going forward, I think that will pay us more.
Incredible. Good to know about that, and good to know about these upcoming projects that Embassy is working on. Last question before we let go of this incredible conversation. What is the capex that you've planned across your pipeline over, say, next 5 to 10 years? Is funding different from what it was, say, COVID era? What has your experience been here?
So we invested roughly 1,800 crores last year. I think we're going to invest another 2,000 to 2,500 crores this year. And we are actually pretty comfortable with just the sales that the projects have generated. Most of our projects have sold 80%, so enough collections to fund all of this. What we did do before launching all of this was we raised some debt. It was a one and done exercise, cost of capital slightly higher than we'd like it to be, but it was needed for us to launch this magnificent pipeline that we have. And slowly over time, we just want to bring home collections and pay off this and, you know, bring our cost of debt down. So this is going to be an evolution. It's going to take 12, 18 months to do so. But from a fundraising point of view, we just feel sales has been so robust, continues to be, that we don't really feel we need to dip into the markets to raise any further capital. Maybe project specific, slight CF that we would do at low cost. But beyond that, we feel that we're actually very set for the next growth of Embassy 2.0.
As I said, it's a marathon, it's not a sprint. So that's
Exactly.
what you're working on. Thank you, Aditya. It was a pleasure speaking with you.
Thank you for doing this, Sonal.
Okay, with that, it's a wrap on this special conversation. But stay tuned to CNBC TV 18 for more news and updates.